Very interesting guests here with us today. Sergey Shlyuger and Mira Pachko. I hope I Prochenko. And they are calling from Israel. So from Tel Aviv, I believe, or around Tel Aviv.
And from Tel Aviv, right?
Tel Aviv, yeah. So where I was growing up. And they will talk with us soon about their groundbreaking platform that offers millions of financial institutions, high net worth clients, exclusive access to diverse range of securitized products linked to innovative and fast-growing companies. So we will talk about that in a second. Couple of words about our speakers. So Serge, maybe I'll start with you. A seasoned professional with over 20 years of experience in investment banking, equity capital markets, and venture capital.
Thank you, Danny.
Has honed his skills in corporate finance, specializing in trans-border M&A and private placement transactions. But your true passion, from what I read, is in taking companies public through IPOs. And he will talk with us about that. Serge was appointed the head of family office. In his role, he was tasked with creating a venture portfolio for the beneficiaries, a challenge he embraced with great enthusiasm. After 5 years, Serge took a short break from joining a highly successful brokerage firm as the head of venture business, and using everything he learned, is well positioned to help Ameetee, which is our company that we'll be talking about, into thriving to a new, prosperous business. Mila, currently co-founder and co-CEO of Ameetee, seasoned professional in structured finance and complex solutions, both for corporate and retail clients. She built and led structured finance business at one of the largest privately owned emerging market banks, creating and leading a team of 13 professionals and running a book of approximately $2 billion. Later, together with Sergey, also co-founder and co-CEO, she created a venture business line at BCS Financial Group, which not only succeeded in launching the first product within 4 months from the start, but also had one of the best cost-income ratio within the group. Only succeeded in Mila's passion for venture capital resulted in 30 plus years of early stage investing and personal investment she does across the globe, where she often assists with fundraising, networking, and strategy advice. She's a member of such angel investor communities such as Angel Deck and New Economic Investors Club. So good evening in Israel, right? I feel like in the Eurovision now. I'm trying to figure out where everybody are. So it's good evening in Israel, right?
Yeah, Danny, hi.
Yes, hi, Danny, hi. Hello, everyone. Good morning to New York, or good afternoon to Israel and elsewhere. And we're very glad and thanks, Danny, for having us here. So what I would propose is that we quickly run the presentation, tell everyone about our vision, how we see the market, what Ameetee brings to this world. And then we will be open to the questions. We will try to answer them all. But if there are some follow-up questions, we'll definitely be ready to answer them after this presentation. So let me begin. And the first thing I would like to say that Ameetee is, first of all, a platform. It is a technology and data-driven platform. It specializes in access to alternative investments, and it is a B2B2C platform. So it's not a classic B2C platform, but we'll get to that later. Dear everyone, given that the investment market is very regulated, we didn't know where you would be watching us from. So please pay attention to this disclaimer. We're not offering here anything. We're describing the vision. We'll definitely talk about the investment opportunities that we think are attractive. But at the same time, this is not an offer in our highly regulated world. So The big vision of Ameetee is clearly to make access to private equity and venture capital, in which we have been specializing for a number of years, to the whole world, to do it in a simplified, easy, and seamless manner. And basically what's important for a big vision. Unless you execute, it still remains a vision. So you need a team, you need this team to be motivated, and you need this team to be very skilled. And very often to be able to achieve the big vision in the end of the tunnel, you really need to have a lot of competencies to think out of the box sometimes, and to have many different perspectives, so that you do not see things in just the same way as everyone else does. And we're 3 co-founders, and we would call ourselves 5-in-1 competencies team. First of all, as Danny mentioned, we're all investment bankers. We are investment bankers in somewhat different specialties. Serge has been specializing in M&A, getting companies are public, and so on. And then he ran a family office and invested in VC a lot. Myself and Nathan, our 3rd co-founder, who is not present here, we were mostly specialized in credit restructurings and things like that. We know derivatives and securitizations very well, because we did a lot of cross-border things of that nature. So the investment banking perspective gives us our ability to understand whether the company is good enough, whether it's fairly priced, and whether you need to ask external experts to analyze it, to do due diligence, so we can do that really deeply. The second competency is that indeed for the investment to be seamless and easily structured, you have to have a lot of knowledge around that. And our structured finance past basically helps us a lot with that, because it's very often when either investment bankers do not know how to invest in VC, or venture capitalists do not know how exactly to best structure the investments to make them fully transferable, easy tradable, and so on. But there are 3 other perspectives which are very important in our view. First of all, you need to know the client side. Very frequently, people start investing at all from some pretty simple instruments like buying stocks and bonds, and you need to know the perspective of just an ordinary investor who is buying his first Apple or his first Amazon share, maybe their first US Treasury bond or something like that. So we do invest in public space ourselves very actively, and we know what are the pains of the clients, or what do they need to see as an interface, and so on and so forth. Also, what's very important, we know how the companies grow, because we have been angel investing for many years as of now. We do have portfolios of my personal portfolio is over 30 angel investments. Some of them have already grown much bigger. They have gone into their C and D rounds after I invested, which is definitely good. And finally, we are in the shoes of tech startup founders ourselves. So all 5-in-1, this is what it is. And given that we had this vast experience, that allowed us to build independently from each other, Serge and myself in one place, Nathan in another place, to build and launch from scratch 2 business lines in emerging market brokerage firms. We managed to do that very quickly, and again, to build that business requires a lot of little things. We accomplished all that. We built the infrastructure. We created the processes so that the retail clients, well, not exactly retail, but accredited investors who are still retail customers for the brokers, could buy private equity through their brokerage firms. And what is even probably more important here is that portfolio that we created there is performing very well as of today, well above the market expectations and better than the market overall. So what are the key themes around Ameetee? When we think about private equity, we think that these are probably exclusive deals. They are not very easily available. Frequently, there is a lot of due diligence you need to do. There is a lot of paperwork. So overall, it's long, relatively complex, not easily accessible. What the platform in a nutshell allows you to do is a very transparently structured, like securitized notes that can be made available to invest from any brokerage account. Saying any brokerage account, I assume that this is a broker or a private bank or a wealth manager who has a custodian set up with our global custodian systems. But apart from that, you can buy these investments very easily. Oh my gosh. Yeah, this is a complex slide. I will showing the basic transaction structure. And yeah, apologies for having it maybe overcomplicated. I will try to run it very quickly and explain what we mean here. Basically, every transaction is structured as a securitized note. So that gives you freedom on the one hand to invest easily through a broker, and to have your investment within the same broker through which you probably would buy and sell other securities. On the other hand, it shows that there are very well respected parties involved, that the SPV that is out there is controlled and administered by a well-known administrator, that the money flows in a very clear way, straight from investors to the SPV account, and then the funds are directly invested into the target. And the similar thing happens on the way back. Upon the exit, funds are returned to the investors through the repayment of the note. And here, over to Serge.
Yeah, hi everyone, and we wouldn't be an Ameetee if we wasn't special. Of course, we have our own edge. First of all, we never do deals without having all the information on the target company. We conduct detailed due diligence on every investment opportunity. We would definitely present you a deal with the transparent pricing, and all transaction documents will be in place. And of course, we offer an opportunity to build a diversified venture capital portfolio by offering deals from different sectors at a more advanced, mature stage, but we would move at a growth stage at a later time. And we have a cherry on the cake that we are realizing now as secondary trading. We aim to create a liquidity in a non-liquid market for you. A couple of slides in this couple of slides we wanted to show you how our internal technology part looks like. Here you see how every client will see from inside registering on the platform. Here you see if you need anything, if you want to get some additional documents, or if you want to ask questions, this is how you will communicate with the platform. This is how the deals look like. You can get all the information and say if you're interested or not. And of course, we have a very easy way of signing all the documentation using DocuSign, which is integrated into our platform. You will never deal with any document signing by hand. We have a very strict criteria for selecting the deals. First of all, of course, it's healthy financials. Second of all, the company should be working on a really disruptive market of a substantial size. The company definitely needs to have very experienced founders. We are trying to find the companies with the founders who have already conducted some business before. Sometimes they failed a couple of times before they became successful, but it's also okay because it's an experience. We look with the companies with the very well-known investors who already believed in the business, who conducted their own due diligence, and who will support the companies in the future, say in the times like we have now in this turmoil. And we never present any deals without full access to the data of the company, which makes us definitely very different from everyone on this market. On this slide, we tried to show you the investment opportunities that might be presented on the platform. Here you see 4 names, 3 companies, actually 3 companies are from the United States. One is from Switzerland. 3 of them are at a later stage of development, which is called late stage. Someone call it pre-IPO stage, means that the company is aiming to go public in 2-3 years. One company at the C/D round, and they are all from different sectors of economy. Remember, I said that we're aiming to create a portfolio to follow the portfolio approach. That's why it's very different in terms of sectors, and even you have late stage and growth stage. Alta Pharmacy is a digital platform offering same-day delivery of prescription medications. Upgrade is a fintech from United States, one of the few fintechs in the world, one of the few neobanks in the world that are profitable. Acronis is the company from a cybersecurity space, the company that grows very well. It provides its services to medium and small business, a very successful company, growing pretty fast. And Outrider is the company from the United States of America. Also, it works for in the field of autonomous yard operations. All of these companies have very good investors, and they've raised many millions before, and 3 of these companies are aiming to go public within 2 to 3 years, when Outrider is at C stage, so it is probably not thinking about IPO as of yet. And this would be everything that we wanted to show you in terms of presentation, and we would be happy to address any of your questions. Danny, to you.
Thank you, guys. So we have a couple of questions that I will be asking you now. So first of all, let's talk about the public markets that are volatile, and valuations are still under pressure. It's a difficult time. Why do you think it's time to invest in venture capital and private equity? Probably it's worth waiting for a better environment, or what do you think about that?
Then it's a very good question. Thank you for asking. On the contrary, we think that because the valuation went down dramatically, it's tumbled dramatically for the last year or the last 2 years. We think that 2023 and 2024 might become the best years to invest, because many companies went lost in the capitalization dramatically, but not all the companies are the same. So say if fintech in general like went down 75 or 85%, it doesn't mean that all the companies are of a bad quality. It's just a market. If something goes down, everything goes down. So you need to have a very experienced team to find these diamonds and select them from other companies. That's when technology of how to choose companies, and that's how and that's when the team is very important.
I think it's even kind of a rhetoric question in a way, because what I will add is, first of all, some of the biggest billionaires that we know are people that took advantage of distressed debt and distressed situations.
For sure.
Sam Zell, whom I had the pleasure of interviewing on our stage at the Chicago conference, one of America's most famous billionaires that sadly passed away last week, was one of them. And besides that, I think in any trend, the first ones to see what's going on and to take advantage, during COVID, when nobody had a clue what they were doing, everybody sat on the fence waiting for things to clear out. I had families investing in VCs like crazy. And not all families, but definitely some. And I think what's even more interesting these days, and I don't know if you know how families are investing today. They are, I think I saw research from last month where they reached the highest point in direct investing in a very long time. Because what's happening now is that even the more conservative asset classes are not there. I mean, you want to put your money in a bank, two banks go down in 1 month, and things are not clear. You want to buy a house, interest rates is high, houses are high as well. You want to go to the stock exchange, bloodshed. You want to go to bonds, you're scared of Chapter 11s. So my point is, what used to be traditional is getting more risky than anything else, and people are saying, you know what the hell? I might as well just take that chance and go and invest in a place that can actually give me a great return. So I just, asked a rhetorical question for you to give me that answer, so I can tell you that as well. So we do see a lot of interest from families, and they do understand that valuations are better, and they do understand the best time to invest is now and not when things are back up again.
Danny, may I add here a couple of points also? Maybe not all of us are following the public markets, but guess which sectors have outperformed by far all the rest in the US market. These are communications and tech companies. And tech index has grown 20%. There are many schools of thoughts who would probably claim that this is some fake or bounce back or anything. But basically what we know is that the tech stocks were hit really hard, pretty similar on the private equity space, very frequently, but not all of them. And the only thing which is important here is the ability to select. So we're probably, as many experienced research analysts would say, we're probably drifting towards the market of 15%, where like a small percentage of selected companies would outperform the rest. This would be pretty similar on the private equity space. So you need to select very carefully, but those whom you select could outperform by far because they are very cheap. Like there are many examples we could show in the public market that have grown probably 150% up this year or 250% up. And this is the situation is very similar on the private equity space, just the upside is bigger.
And do you think we're reaching a recession? Do you think there are other scenarios possible going forward?
Serge, do you have a crystal ball?
I didn't find it in the morning, but I mean, Danny, it's a good question. We also would like to know that. Me personally, I don't think it's going to be a deep recession. I think I hope it's going to be a soft landing. But different indicators show different different expectations. It depends on how you look at it.
I would say that there are many leading indicators that there are showing that the U.S. economy is definitely slowing down quite a bit because of the high interest rates. Historically, I don't think that there in the U.S. history, after such a big hike in the interest rates, the economy did avoid inflation. We didn't. I personally looked, at statistics and didn't discover that, after such a big and quick rate hike, the U.S. economy managed to avoid recession. But at the same time, the question about recession is how severe it is. Does the unemployment rate go to 6%, for example, where the Fed would like to see it? So if we have relatively mild recession, maybe it's even good for the stocks, and it's likely to be good for stocks across the board, because typically the stock market picks up as well as private equity when the recession is here around the bottom. So if we're drifting into recession, it's likely to be obvious relatively soon, and this may mean the bottom of the market.
And which sectors do you think will outperform the market in the next 3 to 5 years?
Crystal ball.
AI, SaaS.
We think, that there are many sectors that we personally like. Many sectors are powered by AI, definitely are likely to outperform. But also there will be some sectors that are, more obvious, like cybersecurity is definitely a sector that we like. Quantum computing may be something that we like, because there is the computational speed is becoming increasingly important. We still very much like fintech, because the valuations have been down in this sector, down to the fair levels, and there is still a lot of work to be done across the globe. Fintech, not necessarily just in the United States, because many countries are catching up in this sector. They're building their own national or regional companies. So we think that would be very, very exciting areas to invest.
And to add to that, Jenny, maybe I personally like space tech a lot. I think there are a lot of things going on around space now, like new materials, new technologies, new data storage, like everything around space is very attractive to my mind. And we see companies emerge in this sector, and we look closely to them at them. And I strongly suggest to watch after them. It's a good sector.
And we spoke about the banks that were failing here. How do you see that impacting the markets? And do you feel like we're gonna have more banks falling in the US or the EU? Forgot about that. We also lost a major bank. What are you seeing? What are your thoughts about that?
I personally think that the failure of SVB is a big loss for the VC industry, because the major role of SVB was not just holding startups money or lending to early and growth stage startups. SVB would lend to much less extent into the later stage. So technically, later stage startups probably are far less impacted by its failure. But what SVB was doing for the whole industry was extremely important, because they were effectively helping the companies with many things. They were creating different events, they were educating startups, they were helping with the networking, and this is definitely gone, most likely. On another hand, the failure of banks is probably equally important to the private equity and their VC space as it is for the rest of the markets. again, without we do not know the future. I think that there are maybe banks in the US or in Europe that are at risk, because from what we've seen from SVB or Signature Bank or First Republic failures, they all suffered from the same thing, pretty high interest rates, and they're relatively large proportion of the bonds held in HTM portfolio. These bonds were definitely fine from the credit risk perspective. They were not so fine from the market risk perspective. They simply lost a good deal of their value. So you cannot completely rule out. But I think that the pace with which Fed reacted was amazing. They coped really well in our view. And again, we're looking from the outside. So I would say that going forward, the problem probably will be less severe than with the first hit.
What's interesting is that the website is still on and you can still become a client. Look, if you press become a client.
Oh, because they were required. Yeah.
Yeah,
Oh.
yeah.
You can still do that.
They're not bankrupt, Danny. They've been saved.
Yeah. But I'm saying they can still accept clients and hopefully still do, their gatherings and the work that you've been talking about. So hopefully in the tech segment, it's not lost for good. What I think is a problem would be the banks that we lost in Europe and here, and that we will not see a trend that keeps on going. I think the fear here is that the government completely saved the banks just to make everybody feel completely secure. But if another one or two fall, then you'll find out that, you know what, they cannot do it anymore. And
Danny, the next the big bank named UBS right now is 150% of the Swiss GDP. So it doesn't seem that it will be the whole Europe, I guess, or if anything that happens, that will need to save the new bank. So fingers crossed, they will figure out all the potential losses related to that acquisition shortly. And these losses will be covered, and there somehow we see a trend there to lower rates, and then everything will be like back to normal.
And I think you saw here another trend where people were moving money from the smaller banks, or at least from other banks, to to make sure they hit the $250,000 commitment of the government to pay your money and back, and went to the big banks. So when I spoke with Chase and Citi lately, they couldn't even had time to breathe because they had a line of clients from other banks. And I hope that will not create a chain reaction where the smaller banks will start to lose their clients for the big guys. You'll have everything centered in one place, the others getting weaker, very few get too strong. Let's hope it doesn't go there. So when we see the valuation, both early and late stage companies have decreased substantially. We also see the amount of new capital invested in venture capital decrease compared to record years like 2020 and 2021. So how bad do you think the situation is? Where do you see the bottom line from what you're seeing around you?
You mean the situation in terms of investments into startups?
And especially early stage, that I think are in a more dire situation, perhaps in some cases.
Yeah, the situation is quite complicated, to be honest with you. The amount of funds being invested into the startups decreased dramatically. In terms of valuations, for the early stage startups, it's not that obvious. Basically, if you're an early stage startup, there's nothing like to lose in evaluations. Yeah, not that much. In terms of late stage startups, now is the time when valuation is the most complicated question. Of course, sustainability, of the company, but valuation is very complicated. That's why we always look at the companies from all the possible perspectives possible. We need the data room. We dig really deep before we present any opportunities to anyone. So yeah, the situation is complicated, but as I said before, you can always dig out some really fruitful opportunities and invest in them, and they will grow. Maybe not that like before. If you look at how venture grows, it's not like a public market when you see every day like the trading, and it's either up or down. But in venture, if the company performs well, it's usually like jumping up. Yeah. Yesterday it was 5 billion in valuation. Tomorrow it's already 25, etc. But now it's a little bit different, because funds, especially funds that were investing like there is no tomorrow in 2021, they own now in a red zone, and they don't want to invest. But on the other side, they sit on huge amount of dry powder, and they need to invest this dry powder. So as soon as the market...
Can you explain what exactly you mean when you say the term dry powder? And we understand it's at an all-time high if you think it's going to be deployed now.
Yeah, dry powder, like the funds work, like almost all the funds, they work the following way. They have an amount from their investors. Let's say $1 billion, but they never invest the full $1 billion in new companies. They deploy about 30% of these funds into new opportunities, and then they look at how the investments perform. If the companies grow, this 70% that is left is called dry powder. So they just sit on this money and wait for the companies to grow. And when they perform well, they took this money and they continue investing in the same companies, because there's no point in looking for the new ones if you have already found good ones, right? This is called dry powder. And look how the fund works, Danny. Say you raise the fund of $1 billion and you're not investing. So you have a negative IRR. Of course, everybody understands why you're not doing that. But when you show how your fund performs, you will show negative numbers. Who wants to give new money to the funds who show negative IRR? No one. So they will have to start deploying their capital soon. I've met with one of the best funds in the world last week, and they've just raised $2.5 billion of new cash a year and a half ago. Do you know how many deals they've done in 1.5 years? Can you name a number? They have 2.5 billion. Can you name a number?
100?
Zero. And I honestly asked them, don't you think it's a bit stupid? Like the valuations are down. You know all the companies. You screen the market for many years. You have fantastic professionals working, and they don't give answers to that. To my understanding, it happens only because they've invested like several $1 billion in 2021, and now their investors are standing and looking at them and saying, stop, let's look at what's going to happen to those funds that we gave you before. They never pronounce it out loud, but that's the feeling I get from talking to these major names on the market.
Yeah, so it's a little bit about behavioral finance, where, you know, I'm trying, people are feeling regret about the past losses, and they're feeling pride when everything goes well, and they frequently associate that with themselves, and they're just giving a little bit more color to what's going on VC landscape. We actually have many interesting things going on. First of all, definitely there is a deep dive of the valuations, and the later the round is, the deeper dive there is. So typically early stage startups valuations, they didn't suffer that much, especially seed or pre-seed level. Round A has become the first, maybe more or less hit, and then later stage, there are definitely remarkable opportunities out there. what is adding to that to a good extent is massive lays off by large companies. And they're very frequently, some of the companies are definitely private. We hear a lot of that in the public space, but many private companies are also laying off their employees. Therefore, the employees are very keen to sell the shares. They are cashing out their options, and there is a lot of secondary opportunities in the late stage in the market. And definitely, this is something to look after. And we do believe that there are some very good opportunities, not just in the primary market, but in the secondary because of that. And the second interesting thing, because of the massive lays off, a lot of former employers are starting their own startups. So I'm very curious to know what we're having in this landscape in a year or 2 or 3 after that, because very many, quite a number of talented people are starting their own ventures.
And speaking about IPOs, Sergey's hobby and passion, how do you see that market recovering anytime soon?
It depends on the macroeconomics and the situation in the world on the whole. But I think as soon as people don't like bad news, Danny. They're getting tired of bad news. I think it won't take too long for this market to start coming back. Probably 2025.
I would say that historically we didn't have breaks or against. I'm talking about statistics. This is what we can rely upon. But historically, the breaks were not longer than 2.5 or 3 years before the public market activity restored.
Mm-hmm. So you're thinking like not next year, but
if not next year, then maybe 2025, and that corresponds to an expectation that if we're having recession, that is likely to mean the bottom of the market, and after the market is drifting upwards, everyone is gradually going public.
So we spoke a little bit about the markets. Let's talk a little bit about you guys and what you're doing with Ameetee. So I know some providers of alternative investments like Forge Global, Moonfair, Zenbatto, or Equity Zen. How is your platform different, and what are your competitive advantages?
Serge, would you like to take over, or shall I start?
Yeah. First of all, Danny, we are. The companies that you named are very, very good companies. There are more on the market, but most of them, they are B2C. What we're doing, we're doing a completely different thing on the market. Look, there are around 44,000 banks and thousands of family offices and private wealth managers who needs access to venture capital opportunities. I've mentioned 44,000 banks, and I haven't mentioned how many clients they have. They have about 60 to 65 million high net worth individual clients who are interested to invest in venture capital. But if they want to, what do they need to do? They need to take their money from their banks and brokerage accounts, and they need to go somewhere to some platform. This is how we're different. We allow these banks to give their clients an opportunity to invest in venture capital opportunities without moving their funds, investing from their brokerage accounts, with all possible data on these investment opportunities. That's the first. That's the first most important thing that we do. Second of all, as I mentioned before, we are trying to create a secondary liquidity without companies go to the to IPO. To do this, we've created a technology when all the participants who join our platform will be able to trade whatever they invested in between themselves. That's very important. It creates, it takes out the boundary of a liquid instrument. You want to add something?
Yeah, I would simply probably share an example of myself. Because the idea of creating such a platform, it was born out of personal experience. If you invest in startups yourselves, sometimes if you have good networking and ability to source deals, you can invest directly, especially if it is an early stage startup, and then you start thinking, okay, so how did sometimes you can do it via angel clubs or via platforms or via angel list, for example, or EquityZen. There are many things out there that are available for an accredited investor in the United States. So basically, when you have invested over 10, 20 times, you are simply starting to get lost. You need to monitor each and every your investment. You need to remember what was the platform through which you invested, and it becomes such a difficult thing that it requires a lot of time, a lot of care. So we think that it is far more, it's far better if I have everything in one at the same place.
It becomes a full-time job.
Yeah, effectively it becomes a full-time job.
But if your job is different, then...
Exactly. If your job is different and you still want to invest in private market, you would like someone to save your time, definitely on that. First of all, you want to give order to buy something very quickly. You want to have everything in one place. You want to have regular updates on your companies in one place. And ideally, if you have the rest of your investment portfolio in the same place as well, because this is what we call, the right asset allocation. So you can monitor, or your asset manager can do it for you, that you can have a balanced asset allocation, have some funds invested in bonds, some funds invested in equities, some free cash maybe, and some alternatives. So that's basically how we're different. We're not B2C, we're B2B2C. Although there is at least Ford Global, they definitely do B2B. And Zanbatar is doing B2B as well. But at the same time, they do not offer ready-to-sell products to the end clients. And the end clients who we're targeting are the clients of financial institutions.
And because they're not offering ready-to-sell products, they will not be able to provide liquidity to them. And
where and how do you source your deals?
Oh, it's Serge. He's an expert.
No, then to these questions, I'll always answer the same way. To source the deals, as of now, it's how now the platform looks like. You can name only 3 ways to source the deals. It's networking, and networking. There's no other way of sourcing really good deals. We have some technological approach on how to get good deals in the nearest future. But let me not talk about this for now, because it's our secret sauce for the future. We can definitely talk about that on one-on-ones.
Now, can an active investor in private markets who already has a large portfolio of VCs and private equity investments divest their holdings through Ameetee's platform?
The short answer is yes. It will definitely depend on what is the underlying investment and what is the price for that. But if this underlying passes our due diligence and scoring, and if we think that the price is right, then yes.
Now we have, I know we're getting late here, but I have on my end, two more questions for you. What can you offer to the clients that are in the US? Are you licensed in the US?
At the moment, we are not, and remember a disclaimer in the beginning of the presentation, but we are acting, first of all, our clients in the US can access Ameetee Platform through their brokers. We also have a partner broker in the US, so everything can be discussed.
And what are the fees that your platform charges?
The fees are very transparent and they are embedded into the instrument. Because we do on deal by deal basis, the fees could be different. It depends on many different like it depends on the opportunity on the market basically. But all the fees are written in the prospectus, so it's crystal clear. Nothing is hidden.
Yeah, basically what I would add there to Sergey's are that typically we will have a moderate upfront fee. We would have some carried interest, smaller than our VC funds. I would say substantially smaller. This is a typical profile for the VC or PE investment. And this can differ for other alternative instruments that we are thinking maybe will be in the available in the future, such as private debt. Definitely, private debt will be less of carried interest.
And and how old is the company? When did you guys start this new initiative?
We're just a young startup. We started about 8 months ago. But because we've done it a couple of times before, as Ludy explained, we know what to do and where to go. But we are at the stage, as we mentioned, Daniel, that is not that influenced by valuations on the market.
Yes, very true. And we're very excited and we're very inspired by the fact that, first of all, this is a huge market, and their investments. There is a great report written jointly by BCG and iCapital, named "The Future is Private," where they do quite a bit of research. I think it is available on the internet. And they do a lot of coverage, and they run a lot of statistics how the private assets have performed, and why indeed, as you mentioned there yourself, Danny, before, the interest is growing towards investing in the private market assets. So basically, our future seems to be private.
Basically, this market is an early stage, really. It's just born.
And
Yeah.
And you are what are you seeking really when it comes to the family office space? You're seeking investment in the company. What are your thoughts there? What are your needs there?
What are our needs? First of all, we are looking for those who would be interested to partner with us in investments, who are eager to share our passion, who would be interested in looking at the deals that are out there at Ameetee Platform, and or that we could source for them. That is our first thing. Second, as Sergey mentioned, we're a startup. We keep fundraising, but like most of the startups, they keep fundraising all the time if they're smart, just because you need to keep the pace of growing. We're fundraising in relatively small checks, so happy to discuss that. We are equally happy to discuss all kinds of partnerships. So if, for example, it is a multifamily office with several or many customers, we're happy to discuss partnerships in terms of distributions, because all the fees that are charged by the platform, they are for splitting with the distribution partners. So here we are also looking actively for some align their interests.
Great. So I think this is about it. We're reaching 10 here in the US. And first of all, we'd love to see you live on our stages. I know you're mainly looking at what we're doing in Europe, and after the summer we have our London conference in Tel Aviv and UAE. So I hope we'll have a chance to see you in person as well. Anything else, Sergey and Mila, that you'd like to add at this point? And of course, those of you who join us know that this is being recorded, and a link with the recording and Sergey and Mila's contact info will be sent to you by tomorrow. Thank you. I'm getting here. One of our folks here says, thank you so much for a brilliant presentation. So thank you. Anything else that you'd like to add at this point?
Many thanks for inviting us here. It was a big pleasure to share our vision, of course. And thanks a lot for your questions. Or I think they were all very relevant to the current situation. And thanks everyone for coming. Feel free to reach out with any questions. We're always there. Happy to discuss private equity, private debt, or early stage startups.
And so
Danny, we see the question from someone: how big is our team? Our team is consists of 10 people for now. Plus, of course, the IT team, which is separate. It consists of about 8 people.
Got it. Thank you for that. And what I want to just ask you is, the next time, please do remember to bring a crystal ball, because it was kind of
yes, yeah, we were missing it. We know.
Yeah,
yes.
I'm sorry for leaving it at home today. And thank you very much. Thank you very much for having us today. We are you have here a very passionate team in terms of venture capital and building a startup. We would definitely do whatever it takes to bring best opportunities to the interested parties. And if you have any questions, we're completely open to having discussions with any and all of you. You have all our contacts on the screen, or you can always ask Danny. He will share it with you.
Thank you guys very much. Thank you all for being with us here. I'll just mention that we have several online sessions planned for the rest of this month, including one with the guy who wrote the story for Star Wars' new game, Jedi Survivor. So we're going to talk about how many millions and what kind of teams sit on one game like that, and how it's done. So that's, I think, is early next month. We also have 2 dinners coming up in Chicago with one of Canada's most impressive serial entrepreneurs in fintech. That's a dinner we'll be holding in Chicago, I believe, June 6th, and another dinner in New York. And after the summer is when we are really waking up here with our conferences in Chicago in September, then New York, Miami, LA, Calgary, and Montreal, Tel Aviv, and London. So
we would be happy to come if you invite us.
Of course. Thank you, everybody. Thank you, Mila. Thank you, Sergey. And we hope to see you soon.
Thank you. And to those who celebrate their Shabbat, Chag Sameach.
Chag Sameach.
Happy holiday, of course. Thank you, guys.
Bye-bye.
Bye-bye.